move on and let's talk about the recent listing on the bourses, the one that listed today itself. Third-party insurance administrator Medi has enjoyed a steady debut on the exchanges in an otherwise wobbly market, listing at a premium of about 10% to its issue price. We do have with us Satish Gidugu, who is the MD at Medi, joining in to tell us more about the company's post-listing plans. The company listed, the stock listed at a 10% premium and has now settled with about a 13% gain. Nothing really to, rock the boat out there, steady as she goes. Importantly, this is an entire offer for sale. So, the sellers are the ones which will be getting the money. Satish, thanks a lot for joining in and congratulations on listing on the bourses. Just wanted your thoughts on a couple of things. One, your revenue mix. I'm just looking at it. Over the last 3 years or so, we've seen the decline come in from the revenue that you would get from the government, from 15.5% to sub 10%. This at a time when the coverage of government insurers under the Ayushman Bharat scheme has been increasing. So could you give us a sense of the revenue mix going forward for the company and the kind of spreads that you get from each of the verticals, retail, group as well as government?
Sure. Good morning. Thank you for having me here. Thank you for the opportunity. It's a big day for us. Just coming straight to your question on the revenue mix, we participate in all the three segments in the health insurance space, which is group, retail, and the government. As you know, last 3 years, the group has been growing way faster than every other segment in the market, and at about 25-26% CAGRs. And we've grown faster than market, and one of the reasons why you see much higher proportion of group in our book. Government, has been a very stable business for us. It's more the rapid growth of the other segments that makes the government sort of look like it is lower on the contribution.
Okay, all right. Hi, Satish. Good morning, Nigel on this side. First of all, congratulations on a blockbuster listing. But, what should this mix look like, between retail, government, as well as group going ahead? A percentage mix, if you could give us that. And also, since you're listed now, people would like to know what is the revenue trajectory. Last year, you did around 520 crores approximately, with margins of mid-20s, 23, 24%. So, but this year, what should the number look like? Because in the first half of the year, you've already grown quite well. You're already done close to 300 crores. So what do you end this year with? And what should the margins look like?
Thank you, Nigel. Like you rightly said, we've closed at about 301 crores of operating revenues in the first 6 months. Of course, part of it is organic and part of it is also the timing effect of the acquisitions that we've concluded. Not all of the acquisitions are fully in yet. And I think in the past, we've grown about 25%, a little faster than the market. We don't see any challenges from tracking to the current market growth rates in the health insurance industry. From a margins perspective, Nigel, I think from PAT margins, we've always been a 14-15% margin business, and even in H1 we tracked to a little over 14%, and I think things look stable on that front. Of course, we have a couple of acquisitions that are in flight in terms of integration. So once the synergies come in, we should be back to the stable, EBITDA margins.
What will that stable EBITDA margin be? And also, you said that you'll continue to grow at this 25% mark, right?
I think we'll track to the market growth rate, Nigel.
And you'll outperform the market growth rate by how much?
No, I think with the market growth rates, both in group and retail, specifically individually, we will track. And of course, then the overall growth rate will be subject to how much exposure we will take to the government business.
Okay. And you've done some inorganic growth. So you said that once those acquisitions stabilize, the margins will move up. So what is the target out there? PAT margins, as you said, mid-teens as of now. Where does that number head to?
I think we're comfortable in the short term that 14-15%. And I think it will take us a few quarters to complete the integration of all the three acquisitions that are in flight. But I think that the mid-teens is a very comfortable, stable outlook.
You've done nearly 7 acquisitions in the last 6 years. I wanted to know, are you going to pause for a bit because you will try and digest and scale these acquisitions, or maybe continue to acquire to fund this 23% plus sort of growth?
No, that's a great question. So far, our growth story has always been organic. If you looked at our the previous 5 years between FY18 and 23, almost all of our growth was fully organic. Obviously, there is some natural consolidation in the market, in India, and we continue to be very opportunistic on acquisitions here, and not necessarily a top line, growth driver for us. But we continue to be, very opportunistic, and if we find a good deal, we will take it.
What proportion of your deals with groups or clients are exclusive in nature, and by when do they come up for renewal? I say this because, your revenue contribution from the top 5 clients is almost 80% and your concentration towards 2 sectors, which is IT and BFSI, is around 75%. So what are you doing to diversify that mix? Are these, contracts exclusive, and when do they come up for renewal?
Thank you. That's a great question. So let me just take one step back and explain how the revenue comes in. We get paid in India by the insurers. We work with 27 out of 28. So the top 5 that you are talking to are more from insurers who are, giving us the revenues. And with each insurer, we work both on group and retail policies. And these are annual policies, right? So they actually renew every year. At the end of each year, the corporate could potentially choose a completely new set of partners. But we've always enjoyed a 94+% retention rate on annual policies. And of course, given that BFSI and ITS had the larger wallet shares in terms of benefits and the benevolence of benefits, the premium sizes tend to be slightly higher. But if you look at the concentration of BFSI and ITS, it's been coming down steadily, and we are present across all of the industry segments today.
Okay. All right, Satish, congratulations on a good listing. Good to speak to you on the first day of being listed. And personally, I would like to thank you and your team. In the last 12 to 18 months, I would have interacted with your staff quite a few times. And I'm quite pleased with the service that you all do give. Wishing you all the best. Keep an eye out on the numbers and also continue the good service, because people come to you all at some of those most difficult times. Thanks so much for joining in.